So if you take a look at this maturity curve for a moment, right? Level one is where you're really in a manual or an episodic, opportunistic view of tax loss harvesting. In other words, if the entire market's down, you have an ability to go through all of your accounts and determine opportunities for tax loss harvesting. That's a gross event. The entire market's down. So you know that the majority of the positions that your clients are in are going to have some sort of loss that you can basically harvest that loss. So when we talk about tax loss harvesting in a manual or episodic event, you're looking at really large scale events where you have enough time to analyze the holdings of your clients and then sell some of those positions, put them in alternative positions, which hopefully will then appreciate. And then you have the ability to carry that loss forward. So when you think about the manual and episodic portion of this, it's very difficult to do this at scale, right? Because you need to have an event that's going to be where you have a market downturn that's going to be down for quite some time. So when you think about that, that ability to do this more often is really difficult. So in many cases, you find that advisors are going to do that on an ad hoc basis, or perhaps they'll look at this annually or quarterly. And you can see right now, there's a poll that we've just put up that walks through how often are you doing tax loss harvesting. And right now we're seeing some of the answers come in. Most of this seems to be at this point ad hoc or when needed. So in many cases, that points to that level one of maturity, where on an ad hoc basis, when there's a large market downturn, you're going to take that time period or that market movement as an opportunity to do some loss harvesting for some of your clients. The challenge that you get into with that level one is that it's very difficult to do it at scale, as I mentioned. So what winds up happening is you do tax loss harvesting for maybe the top 10 to 15 or maybe the top 20% of your clients. And the rest of your clients, you just simply don't have enough time in the day to be able to take a look at that and be able to harvest those losses effectively.